let me introduce Tameer Bank as a microfinance bank which is regulated by the Central Bank of Pakistan under the Microfinance Ordinance, and our experience with dealing with mobile banking or branchless banking as it's called by the regulator has been a roller coaster so far. We are one of the few players who are actually pursuing this as a full-fledged valid business model as opposed to value-added services or induction of a new channel. The issues which Tameer Bank was facing as a nascent player in the microfinance space in Pakistan was actually liquidity. Commercial banks weren't ready to lend to microfinance institutions, and neither were large multilateral or bilateral donors. So the only way was to create organic deposit-taking capabilities, and for that means large volumes, small values. We were developing a deposit initiative which sort of like led to this channel investment. We approached various multilateral institutions to see if there was any interest in them developing a joint model, and we stumbled on CGAP, and they had a technology program whose applications were being called at that time. We worked with the CGAP analysts, microfinance analysts, to develop a business plan which got approved at the steering committee level. And this was like middle of 2007, and since then we've been developing various aspects of it. There's been, it's actually four-pronged approach. One is to develop an agent network which would reduce tremendously the branch banking costs which we incur right now. And secondly was to develop the underlying technology channels, one of them being the point-of-sale machines and second being the cell phone. We initially thought that the cell phone channel is going to take time for both the agent network uptake as well as the client uptake, but it's basically been on the reverse side. We've seen keen interest by telecommunication players, large ones in Pakistan, who want to take this up as a churn reduction strategy at their end, as well as trying to provide new incentives for the franchisees for effective customer services to their clients and to the agent as well. So we've partnered with a large mobile network operator in Pakistan, and we would jointly be offering mobile wallets serviced through the agent and distribution network, giving a wide range of financial services as opposed to only the payments, which is a normal mobile banking business model in other geographies. The regulator has been very supportive and has provided the support for our business model. We've gotten the regulatory approvals to take this thing forward. We are at a stage where we are finalizing the finer points of the distribution plan, the commission and the structuring, the customer services aspect, and the liquidity planning side of the business, because in scalability these would play a key role, whether this is going to take up as a serious business model for both the telco and the bank. Working with CGAP so far has been quite an eye-opener. We've had real insights into various geographies on how they have approached similar issues, both at the regulatory level, technology level, as well as the service level. And we are keen to forge this alliance forward and till we also have a real commercial business which is viable for both the telcos and the banks in Pakistan. Infrastructure issues would be part of a few of the obstacles of launching mobile banking in Pakistan. When I say infrastructure, I primarily mean the country's infrastructure. There's not enough efficient clearing systems or acquiring networks in Pakistan to build upon or bring synergy with our network which we're building. And we see lack of proper power infrastructure in smaller cities. We see a little bit of state banks issues related to how to audit a large agent network as few of the things which needs to be addressed going forward. Another thing which would come into play, which is like real operational nuts and bolts, is actually the attrition level of staff and the quality of training which gets imparted at the agent location. Because if the agent uptake is low, and so would the uptake of the business model. When we were doing our regular distribution development, which was branch banking, this means brick and mortars. This means capex, which means opex. And we found out that poverty is not only an urban or a semi or peri-urban phenomena, it's actually quite deep-rooted in the rural. And for us to invest the kind of capex which is required to create a branch, hire the branch staff, and deliver full banking services was something which is not going to be scalable. And with the introduction of the guidelines which the State Bank of Pakistan has taken out, with the processes which are being built jointly with the telecommunication partners, it seems that the scalability of financial services to the real lower echelon of the population base of Pakistan, which are unbanked or under-serviced, would be possible and in a very short time. So we see scalability as the key by introduction of branchless banking.